I disagree with this. If your sole proprietorship is earning just enough money for you to survive and you're using all of the money in your sole proprietorship every year, sole proprietorship works. All the money that you earn in that year gets claimed on your personal taxes and you are taxed on it accordingly. But if your sole proprietorship starts making $500,000 a year and you have to claim all of that on your personal income tax, all that money is going to get claimed at the highest personal tax rate. At that point, you would want to incorporate, because then corporate tax rates are less than personal, and you only have to take out of the business what you need and leave the excess, the retained earnings, in the corporation, which acts as essentially a natural tax shelter. And so you say corps have to tax shelter. That's a good thing. You only have to trigger those higher tax rates as you take that money out of the corporation. For the smaller operations, absolutely, when you don't have excess at the end of the year, or you're comfortable with the, being taxed at your highest rate on all of the money your sole proprietorship makes, then sure, stick with that. But that reason, as well as liability reason, when you have a corporation, it's a separate legal entity and therefore can sue and be sued. So if there's anything in your business that might bring up a lawsuit one day, if you get sued as a sole proprietorship, they can take your home. They can take everything you own because you are the business. A corporation, on the other hand, there is that veil. There's a lot of things to consider. For some people, yes, staying in a sole proprietorship might work totally fine. But I find that if people do want to grow and expand their business, incorporation comes into play at some point.